At the risk of overcomplicating this, the Bullwhip effect is essentially an elementary school game of telephone. Now, I don't know if you guys have ever had the opportunity to play that game in school, but basically it starts with one individual sharing a secret message with the next person, who then in turn shares it with the next person, and so on. And with each successive iteration of that message, it slowly becomes more and more distorted and morphed and manipulated until it no longer resembles what that message once was. Basically, that's what the Bullwhip effect is, but applied to supply and demand, until eventually the disparity between those two grows so great that it leads to an overproduction of the actual product and then subsequent saturation and devaluation. Is that what's in store for Pokemon? Tune in and find out. Hey everybody, what's up from Pokemon Classics, reminding you that the classics never go out of style. Today's video is a bit more speculative than usual, but I wanted to examine how the implications of a sudden and massive supply increase might affect the overall Pokemon ecosystem moving forward. In particular, I want to look at overproduction and how that overproduction may inadvertently lead to the devaluation of those exact same products. Anyway, I'll also offer some of my own personal thoughts and opinions on how this supply influx might affect Pokemon in both the short term and the long-term future, along with some potential opportunities that may be around the corner for collectors. But first, let's talk about the Bullwhip effect. Now, this is an economic term explaining how an unanticipated spike in demand can sometimes lead to an overproduction of a good and then its eventual devaluation further down the process. In the intro, I liken this to a game of telephone amongst elementary school students. The same is true here, but across the production line, as each entity within that production line overestimates the demand and orders increased supply in order to cover and meet that demand. Now, this is triggered by elevated consumer demand, which prompts retail stores to order more product than necessary to cover that demand, which in turn prompts distributors to order more product than necessary to cover their distribution. And it all comes back to the manufacturers, who then vastly scale up their manufacturing processes as well as their infrastructure in order to meet those production quotas to fulfill their distribution orders. With each phase of this process, the production wave grows bigger and bigger as each entity accounts for more demand than what actually exists in the consumer realm. And before you know it, the market is oversaturated with product, leading to inevitable devaluation. In fact, we may be seeing this play out in Pokemon right now. Back in 2020 and much of 2021, Pokemon card interest increased 200 to 300% according to Google Trends. And if you recall, this was the same period of stimulus money, influencer hype, and Pokemon's 25th anniversary driving attention to the hobby. And as a result, cards were sold out everywhere, and I mean everywhere, leading to a massive supply and demand imbalance. But the Pokemon Company adjusted their production to meet this level of demand. But is that level of production still necessary? And more importantly, is it sustainable? Let's take a quick look at modern Pokemon. As previously mentioned, consumer demand skyrocketed in 2020 and 2021, leading stores to order more modern product than ever before. And I know it's anecdotal, but the number of new stores that were carrying Pokemon cards for the first time in the last couple years was also unlike anything I've personally ever seen before. So Nintendo's response? Expand manufacturing. Like, massively expand manufacturing. In fiscal year 2020 to 2021 alone, Pokemon produced 3.7 billion cards. Billion. Its biggest year-over-year increase ever, at least at the time. In fact, this production level translated to 10.8% of all Pokemon cards ever produced. That means that out of all the Pokemon cards ever produced in the last 25 years, 10.8% of them were produced in that singular year alone. It's no wonder that the supply shortages were short-lived. Pokemon acted relatively swiftly and decisively to meet the growing demand. But then last year happened. In fiscal year 2021 to 2022, Pokemon produced 9.1 billion cards, almost 3 times as much as the previous year. This production level translated to 21.29% of all Pokemon cards ever produced were produced just last year alone. Think about that for a minute. 1 in every 5 Pokemon cards in the entire world was printed just last year. Despite being the most popular media franchise of all time and existing for 25 plus years, that's simply amazing. And I hope you'll forgive me, but here's where it gets a bit speculative. But here's the question. If production continues at this level, will it saturate the market and eventually devalue the very products being produced? We've already seen demand dropping, especially as the macroeconomic situation worsens with growing consumer debt, higher interest rates, and a looming recession. In the short term, I could see distributors and retailers struggling to move so much product and needing the liquidity, perhaps creating a buyer's market as sellers seek to undercut one another's prices. We've certainly seen it in other markets, and if Pokemon keeps pumping out numbers like this, with production just going off the rails, I'm not sure there'll be a sustainable demand to absorb all of that product indefinitely. To be fair, I'm not just picking on modern Pokemon. This also applies to graded slabs. Back in 2020 and much of 2021, card grading interest also increased 200 to 300%, according to Google Trends. And if you recall, this was felt across all collectible hobbies, with a number of companies so bombarded by collectible card orders that they couldn't process them all and even had to close. And a number of other new companies entering the market to start grading and authenticating cards themselves. In fact, my submission from March of 2021 is still at PSA here 15 months later, but I digress. The point is that there was a sudden spike in demand, and a lot of these companies and individuals have adapted to meet that level of demand, regardless of whether or not it's there moving forward. We may be in the midst of a bullwhip effect here as well. When collectibles were booming in 2020 and 2021, demand for grading skyrocketed, with consumers sending in record numbers of cards for grading. In response, many of these grading services massively expanded their workforce and their infrastructure to accommodate this new level of demand. However, once more, the question is whether this level of demand will be consistent moving forward, or if sellers and grading companies overextend themselves, anticipating levels of demand that may have only been transitory. Using PSA as a case study for other grading companies, let's take a look at some numbers. In 2021 alone, PSA graded a record number of 7.6 million collectibles, increasing their output with each successive month of the year. They also invested $100 million into a new brick-and-mortar location in New Jersey, along with over 100 new employees to staff it. Over a year later, PSA has nearly dug themselves out of the 13 million card backlog, turning out an estimated 30,000 cards per day. They've clearly adapted to this new level of demand, but whether or not this new demand persists remains to be seen. In fact, some indicators already seem to suggest otherwise. We've now seen PSA reopen all of its service levels, though at higher price points than before. However, I wonder if these price points are financially viable for the overwhelming majority of cards that people were previously sending in. Again, we've already seen demand dropping amid macroeconomic fears like high inflation, the looming recession, consumer debt. So these price points may need to lower substantially in the future in order to generate appropriate demand for the services that PSA is providing. This is particularly problematic if PSA and other grading companies are depending upon previous levels of demand to service their own operational costs, which I assume have also risen significantly since the pandemic. More importantly is how this may affect buyers and sellers of graded cards. We've already seen massive backlogs of cards currently hitting the market at roughly the same time, diminishing the competition and lowering prices pretty much across the board. This is happening while many sellers are overextended, either due to their entry prices or their grading fees coming due, prompting a need to liquidate quickly and undercut other sellers' prices. This effect is likely only to be compounded with the new higher service fees, minimizing potential profit, especially for those cards without strong fundamentals, without rarity, without scarcity, without high condition ratings. Cards that probably shouldn't have been submitted to PSA or other grading companies in the first place. It's entirely possible that many of the cards currently submitted at the $30 and $50 tiers won't even be worth the grading fee by the time they return to their owners. I suspect we may be in the midst of an overproduction of graded slabs, leading to saturation and eventually an intense liquidation phase. I know we've talked about this on the channel before, but these types of things move in cycles. We've seen previously the period of temporary scarcity as grading companies were closed down and products were flying off the shelves, scalpers were running rampant with Pokemon products, and now I think we're transitioning to the other end of the equation with temporary saturation, as all these graded cards are coming back and entering circulation at roughly the same time, and products are being printed to the tune of 9.1 billion cards in just the last year. Now, unfortunately for some, this is going to be a buyer's market. It's going to lower prices pretty much across the board because that's the way consumer sentiment and consumer psychology works. But this also means that there may be some great buying opportunities, particularly for those items that are genuinely scarce, rare, and have high condition that are being swept along in the current of things. But here's the universal truth, the underlying takeaway that if you get nothing else out of this video, it's this. Markets are inherently self-correcting, and if given enough time, we will see the pendulum shift from one end back over to the other side. And even though we may be entering a phase of temporary saturation and liquidation right now, it will be followed by a consolidation phase as savvy investors, experienced collectors, and those that understand the market fundamentals seek out items that are genuinely undervalued amidst all the rest. There will be buying opportunities for those with the knowledge and experience to do so. Anyway, guys, let me wrap this one up by stating that nobody really knows what's going to happen in any market, let alone this one. These are merely my thoughts and speculations on how an overproduction of Pokemon cards and Pokemon-related products may be triggering a type of bullwhip effect within the Pokemon market. But anyway, I look forward to hearing your guys' thoughts on the matter and where you're seeing Pokemon cards in the next short-term, mid-term, and long-term future. Let me know down in the comments below. That's going to wrap it up for this one. I'm Pokemon Classics, reminding you that the classics never go out of style. We'll see y'all with the next video. Till then, stay well, everybody, and enjoy collecting.